fast for the management to explain why after 8 years, suddenly they want to take ownership of the plant back from the parents. So I think it'll be an interesting chat for sure.
Absolutely. And in fact, we have the management joining us now. So just to give you a sense of what things have, what has transpired, it was a mixed bag in the first quarter. So profit and revenues beat expectations, but margins fell short because of higher employee costs. But they've also, as we were just discussing, terminated that contract manufacturing pact with Suzuki in Gujarat. So now they will acquire SMG, Suzuki Motor Gujarat, from the Japanese parent. Let's find out more about this. Mr. Bhargav, the chairman of Maruti Suzuki, is with us. Mr. Bhargav, on the transaction first, just want to understand, will this transaction be EPS accretive? Because there will definitely be a cash outgo. So just trying to understand what the contours would look like and what is the rationale behind this sudden change in plan?
You know the background of SMG. In 2014, Suzuki gave us this offer that they would put in all the money as equity to set up the production facilities which we were originally planning to do, so that we would not have to make any investment there. And then they would make the cars and supply them to us under contract manufacturing agreement at cost. And it seemed to a lot of people to be a transaction which is too good to be true, but actually it was in the interest of both parties. And as a result of which, till now, we have, as Maruti, earned an extra interest income from not investing of something over 5,000 crores. And the production has taken place smoothly. We didn't have to put in any resources. Everything was going fine. But in these 9 years, Sonia, a lot of things have changed. The market for Maruti has become much bigger. And we are now already at 2 million. And as you know, we are in the process of growing further and expect to reach 4 million by 2030. The number of models which we are making will keep growing with the addition of more SUVs, with the addition of EVs, and that model number could be anything 26, 27, 28, I don't know, some number like that.
Okay, you also mentioned to me that this will minimize, you will try and minimize the losses to both entities. So there's definitely going to be some loss. And of course, you'll tell us that when you have that board meeting next with Suzuki Motors. But is it fair to assume that at some point this deal will become EPS accretive for you? And I also want to understand, would this mean there's any change in the capex plan for both entities?
The capex plan doesn't change at all. The costing will not change at all. The production volumes will not change unless in some way we can add a little more capacity to the plant in the SMG. Those are little things which we are doing in all our plants, so that's not an important part of it. How we will buy the shares, as we have said, we have yet to discuss in another board meeting. And we will then discuss the modalities of buying the shares from SMC. And do that in a manner which will, as I said, be in the most beneficial manner.
Mr. Bhargava, good morning, sir. But we just wanted a little more clarity on the thought process. So what has changed? Yes, a lot of time has gone by in the last 7-8 years. Earlier, the rationale that Maruti gave was that the Indian entity will not own this plant. It will focus more on marketing and servicing. And you'd actually benefit from the parent, Suzuki, making that big investment in production. So what has changed now to turn this on its head pretty much 180 degrees?
The ability to manage this kind of volume which we will now have, and we've already reached, actually, we've reached 2 million, 2.2 million. Without reorganizing Maruti is not going to remain possible. Nobody in the world is doing this kind of volume under a single company with a single management. And the complication is compounded by the fact that the number of types of technologies are becoming much larger than they ever were. So with that situation, the whole problem of management, coordination, shifting production, changing volume becomes much more difficult if you have two managements dealing with it. So we this is actually one stage. I believe that once we have this part of it completed, and we are on our way towards completing, or at least starting the production at Kharkhoda, and then we've also picked the next site for expansion and started working there. There will be further reorganizations happening in Maruti. We can't go to 3 million, 4 million with this organization.
Okay, you felt the need to change because you are looking to produce a lot more, and then you want to take ownership of all your plants. Got that, sir? How are shareholders viewing this? Have you had any conversations of this new change? And also, will there be any, in the interim till you get this done, will there be any change in the estimation of, let's say, the sales or the volumes that you're looking to do right now?
The shareholder should feel reassured that this acquisition of SMG will immediately not make any difference in terms of the production volumes, sale volumes, or the cost of the car. He should also feel reassured that because the objective of this is to increase the efficiencies of all operations, over a period of time, this merger will actually make the organization capable of performing at a higher level of efficiency. And that will be to the shareholders' gain. He should also feel that if we reorganize Maruti to more effectively deal with a larger number of technologies and a larger number of models, larger export volumes, and go up to 4 million production, all of that will be to the shareholders' benefit. If we remained unchanged and we fail to recognize the changes that are happening in the market and in the whole automobile situation, then I think the shareholder would, after some time, have realized that the whole Maruti inability to change is actually hurting them.
Okay, I think the shareholder concern is that if the termination of this agreement provides synergy benefits, then why was this agreement done in the first place, right? So that change of stance is something that perhaps could spook the street. But sir, enough about that. Let's talk about the industry growth as well. Earlier, you had guided for a 5 to 7% volume growth for the industry in FY24. Given what you've seen so far, there's no recovery in the small car segment. Any change in that guidance at all?
No, I think we're on track. We have grown compared to last year by 6%. And this was despite some loss of production because of the semiconductor thing, 28,000 cars in the first quarter. We expect the semiconductor situation to only get better as we go along in the rest of the year. So that one constraint which has been there for some time now will go away. And the new production volumes, which we expect because of that, should help us grow a little bit better than 6%.
Okay, so you'll grow better than 6% in FY24. That's still, single-digit growth that you're looking at. But what about the margin fall that we've seen quarter on quarter? You, of course, mentioned in your press release that it's because of higher employee costs. But do you see more pressure in the quarters to come?
I don't know about margins, but in the first quarter of the year, the employee expenses always go up. If you compare from last year to this year, it's a 0.1% difference. And if you compare with the previous quarter, it's a 1% difference. And that is because the wage increase, salary increases happen in the beginning of the year. The year goes on, and that addition, lump sum addition which comes along doesn't happen throughout. And as volumes increase over the year, the employee costs come down.
Mr. Bhargava, thank you so much for taking the time out, speaking to CNBC-TV18 and clarifying all our questions with regards to the SMG acquisition, what it means for shareholders, as well as the margin pressure that the company is seeing. Appreciate your time here. Let's slip into a quick break, but what do you do with a stock like Maruti? We'll ask Gurmeet Chadda, Managing Partner and CIO at Complete Circle Consultants, in just a while. Stay tuned.